ARK Invest recently updated its prediction for Tesla's stock price for 2025. Its base case now sits at $3,000. And today, Tesla shares come in close to 700, so they'd have to climb well above 300% to reach that price target. And keep in mind, this is after a huge run-up that's already happened in the past year. Tesla would go from a $650 billion business today to $2.9 trillion in less than 5 years. And as you'll soon see, it gets even more ridiculous. Now, do I think this is possible? Sure. We've seen many valuations stretched very far in this wild market. Also, I'm a huge fan of what Tesla and Elon Musk are doing. But do I think this price target is probable? No. At least not within the next 5 years. And as a rational investor, even though I think Tesla is a great company, I think this price target simply is not, as well as its current price. Of course, ARK Invest's analysts are entitled to their own opinions, as am I, but I think it's gotten out of hand. It's also good to consider that ARK Invest is probably trying to get more media coverage, as well as investors to their funds. So I take these wild predictions with a grain of salt, even though they have been correct with a few of them in the past. And in this video, I'm going to take a pragmatic, unbiased approach and hopefully help put things in perspective. On the higher end, ARK Invest thinks there's a 25% probability that Tesla could be worth $4,000 or more per share in 2025. That would put Tesla's market cap at around $3.8 trillion. Here's the expected value, as well as the bear and bull cases for Tesla's share price in 2025. I calculated these market caps assuming Tesla's total shares outstanding of about 960 million. That number doesn't change, although that's very unlikely based on past trends. Here's the increase in shares outstanding over the past 5 years. If you bought shares of Tesla a few years back and haven't added to the position, your percentage ownership in the company has gone down. And this isn't necessarily a bad thing. Also, if you're looking closely at these numbers, they come in slightly higher than what Tesla reports as shares outstanding. That's because this chart factors in potentially dilutive agreements. On top of that, it's also adjusted for the stock split. So shares outstanding have steadily climbed over the past 5 years and are up well over 60%. But will this continue? Let's use this trend and other recent history as a guide. Elon Musk in the January 30, 2020 earnings call said that it did not make sense to raise more money because they expected to generate enough cash. But lo and behold, just 2 weeks later, and this was before the pandemic, Tesla announced that it would sell another $2 billion in stock. On top of that, underwriters had the option to buy another 15% or about 300 million worth. At the time, I think it was a smart move by Elon and company. Of course, you generally want to avoid telling your shareholders you're going to dilute their ownership, but it can make sense when you think that the share price is lofty, along with the valuation. So Tesla thought it was a good time, even though Elon Musk said it wasn't necessary. So with that line of logic and shares up roughly another 300% from that issuance, it could make even more sense to issue more stock. Elon Musk has even raised concerns over Tesla's sky-high valuation. Back at the start of May 2020, he tweeted, "Tesla's stock price is too high, IMO." That was when shares traded for around $140. So I expect the upward trend in shares outstanding to continue. In ARK Invest's article on Tesla's 2025 price target, it listed a $3 trillion market cap for the base case in 2025. I found this just in one graph, and I didn't really see any other discussion around dilution assumptions. The analyst behind the ARK Invest article, Tasha Keeney, has passed the CFA exams, and I've gone through those exams as well. They definitely help lay a solid foundation for better understanding company and share price valuations. So I'd be interested to see how they've updated their dilution forecasts. Nonetheless, the Tesla price target for $3,000 and a $3 trillion market cap implies less than a 5% increase in shares outstanding in the next 5 years, or in less than 5 years. I think that's unrealistic, and instead, let's say shares outstanding continue to grow at half, or actually less than half of their past 5-year rate. That would be 30%. And with that, here are the projected market caps for Tesla. The expected value, bear case, and bull case. For some comparisons, let's go forward with these adjusted market cap projections. Using ARK Invest's $3,000 price target, that puts Tesla at a whopping $3.7 trillion in less than 5 years. That's higher than Canada and Mexico's GDPs combined. Standalone, that Tesla valuation would also put it above India's current GDP, a country of close to 1.4 billion people. Now, for a better comparison, I could show you all of the other auto manufacturers combined compared to Tesla. Although this has been done so many times, and the main counter-argument is that Tesla isn't just a car manufacturer. I agree. It's a technology company with a lot more potential. So instead, let's compare to Amazon. Of course, once again, this isn't apples to apples, but Amazon is breaking into many markets with huge potential as well. It also has high margin segments that are growing, such as AWS. Now, as I run some numbers by you, keep in mind that Amazon's current market cap is $1.7 trillion. That's less than half the size of the $3.7 trillion base case projection for Tesla in 5 years. Here's the past 3 years of revenue for Tesla versus Amazon. In 2020, revenue for Amazon came in at $386 billion. Tesla, on the other hand, had less than 10% of that, $32 billion. Now, some people might say Tesla is smaller and it has the potential to grow faster. Well, here's the year-over-year growth for the revenue. Amazon is more established, yet it's been growing revenue at a faster rate than Tesla, even in 2019 when it wasn't benefiting from the pandemic lockdowns. Now, on the profitability side, Amazon reported net income of $21 billion in 2020. And Tesla reported just $0.7 billion. Sure, Tesla should become more profitable in the years ahead, but using some decent comparables, ARK Invest price target for Tesla is outrageous IMO, and likely in Elon Musk's opinion as well. One of the biggest issues I have with ARK Invest valuation comes from robotaxis. ARK assumes that Tesla has a 50% chance of delivering fully autonomous vehicles or fully autonomous driving by 2025. They project Tesla's robotaxi efforts will account for half of Tesla's total market cap and over a quarter of the company's revenue. That's wildly optimistic. Sure, Tesla is making huge strides and has a massive data advantage, but there also are some very deep-pocketed competitors. And more importantly, the final steps of removing the driver comes with a lot of regulatory barriers. Overall, I'm a huge fan of Tesla. I absolutely love what the company is doing, and I'll hopefully be a customer in the coming years. Although ARK Invest price target is absurd for 5 years. Sure, there could be an inflation spike or some other tail cases that make that happen, but as a pragmatic investor, some alarms were ringing when I looked at the data and trends relative to this price target. I have no doubt that Tesla will hit these huge valuations, but in 10 or more like 15 plus years is a little more realistic. If you enjoyed this research, I'd really appreciate it if you just tap that like button down below ever so gently, as well as subscribe. And please let me know if you have any questions. Do you think ARK's price target in 5 years is realistic? Have I missed something? Also, if you're looking for some better investing opportunities, here's my recent video on the top 6 dividend stocks to inflation-proof your portfolio. Thanks for stopping by.